sure if you see from the title of the video, you know what this is going to be about. Stash added a new ETF to its list, and I'm interested in it. Corporate cannabis, aka weed stocks. So this is a interesting step, I think, that this app's making. But let's go over real quick. So mainstream marijuana is a young, volatile industry. The investment combines legal cannabis cultivation, distribution, and medical applications with big tobacco stocks to focus on the benefits global cannabis acceptance may bring. Warning, this is a high risk, and you look at the risk level on this, aggressive. This is very good. This is going to add an aggressive edge to your portfolio. But warning, this is a high risk speculative fund exposed to legal and regulatory uncertainty. Consider how your investment in this product may be treated under any rules, policies, and procedures you may be subject to, including by your employer. And that's something to remember too. I don't think anyone would fire you for buying stocks in marijuana, but I mean, that'd be weird. But I mean, I guess maybe that's the thing that they're kind of implying. But if you look at statistics, just going off like Colorado and other places where weed has been legalized, you know, when it first got legalized, they were making like $1 million a day, I think. And yeah, it was about $1 million a day. And they reported the first 5 days, they basically made $5 million. So $1 million a day. And that's crazy. And they're estimating California, my state, having it legalized can basically generate revenue of upwards of $1 billion, which is an incredible amount of money to add to our books, basically. And you know, the taxes for that can go to schools, they can go to hospitals, you know, police departments, fire departments, you know, funding like roads, jobs for like more government jobs, like our mail services, you know, stuff like that. All that tax can give a big boost to that, which is really great. But I think the most interesting part of this is the aggressiveness of this ETF. Because if you look at all the other ETFs, you look at blue chips level risk is conservative. You know, women who lead is conservative. Gold, all that glitters is moderate. You know, on cloud nine, moderate. Real estate tycoon, moderate. You know, there's not very many aggressive ETF options in this application, it seems like, until now. And this is like fully aggressive. You see, it's like all the way aggressive. But this is, like I said, it's high growth. You know, that's basically what this ETF is targeting. It's a new industry. It's not a new product by any means, but it's a new industry, legal marijuana. So everything that's sold is basically taxed. And I'm sure they're going to treat it like the other sin taxes, like tobacco tax, alcohol tax, and there's like a third one, I forget. But basically, those are like kind of like the sin taxes or whatever. So now, you know, they're going to add this to the mix. And if we look at it on a graph, MJX, so we got, there we go. We got Alternative Harvest ETF. I love that name. How far back can this go? I have not yet seen this chart on a 5-year. I don't know how old this ETF is. Get a good idea. Okay, so it started beginning of 2017. So we can go back about 2 years, which is pretty good. Get some good information. So on a 2-year chart, now this spike, the beginning of this year is when you know, legalization basically happened. It seems like day one. So obviously there was a huge spike off that, which does show investors being very interested in this because, like, again, it's a high growth new market. It's aggressive. You know, it has the potential to take take revenue away from tobacco products, take revenue away from alcohol products, even take revenue away from pharmaceutical products. You know, the weed industry can do a lot of things, and that's why it's been suppressed for so long. It's because all these other companies, you know, see it as what it is a major competitor to the product. But if you look at this on a 2-year, I mean, it's been steady trending upward slowly. I think mainly because just between now and legalization, there hasn't been much reason for people to buy this because, you know, it's not legal and they know it's a controversial product and everything. But look at this January, just how it just spiked. It broke out of this trend, and I'm hoping it can kind of come back and touch this line, and we'll zoom in for a 6 month, just make it a little easier. So pretty much, if it could come in around this second line drop right here, there's this first dip, and then I want basically a second dip to happen, and that's where I would buy in. So somewhere around this candle right here, where this came down and touched, I would say the likelihood it might go to maybe right about here, about $35. I'd probably buy there and be fine with it, but I'd really like to see this drop. But I think this candle right here is just so long. I think that was just a sharp drop and a spike back up. So you can tell in that same day that all that sell-off was happening. A lot of those shares got back up because they look how high it got up, and it's already a couple days later at the all-time high again. And you see on the RSI, it was really high a few days ago, and now it got up and it's coming back down. So I hope it just comes down a little bit more, and I'd be interested to buy that, because on top of having tech in my portfolio and defense in my portfolio, which are really good high growth sectors, now I have another diversified sector I can get into that also has high growth. So this is really going to turn into a high growth portfolio on top of my other factors I have in this this stash app. And like always, like I said, I know other people do it a little different, and how they I love these little news articles. Sorry, cashier Listora, sorry about that. Yeah, that's another thing about this app, just giving you guys information. But like I keep it spread out because just how the market is lately. The market's really been pumping because a lot of my ETFs like are way overbought. Like if you look at everything I got for like Internet Titans, Defending America, Money Machines, and all that. If you look at FDN, which is so this is my Internet Titan. Look in the RSI, it's really overbought. It's getting pumped. We got, which is my Defending America. You see, it's starting to get back into the green right here. It's starting to get pumped up a little bit as well. What's my Money Machines? Forget the VFH. I gotta get better at remembering these tickers. VFH, you see, it's getting up in the green. It's getting pumped. XLV, healthcare, you see it's getting up in the green, it's getting pumped. There's a lot of pumping going on in the market. It's crazy right now. It's almost like the Bitcoin market. Not quite though. The numbers don't match up. But my oil, it's still, and I sold off some right here because I was looking at this previous run up right here, and I was like, it's gonna sell off, come back, and I was gonna buy back in, but it looks like I gotta continue waiting because it's still just way overbought. Look at all this green. All this stuff is really pumping. And then Robo, which is my Robots Rising this year, this is in the green, it's pumping. So all these ETFs are pumping right now. If you're watching this, I wouldn't be a buyer at this moment because everything's just so overbought, it's so blown up right now. It's crazy. But I am still watching. I'm still waiting for my moment. But I have all these bookmark ones basically that I would like to buy into at some point to add, but at the same time, I'm not trying to overload my portfolio with just a bunch of ETFs. I want to keep a good solid amount, like under 10 would be like the most, I think, ETFs. Like I don't want to have like 30 or 40 ETFs that I'm watching, but I like diversity in my portfolio just to feel a little safer, and also having different high growth, steady growth type investments. So corporate cannabis is, I think I'm going to try to add that one. Women Who Lead, I really like this one. This is, I was saying in another video, like having diversity in my other ETFs that are internet, defense, healthcare, medical, banks, oil, European stocks, like that. Those are all companies that majority of them are ran by men, just by statistics of like male CEOs versus female CEOs. So having the Women Who Lead ETF is like gender diversity in my portfolio. So I have a lot of female CEOs and empowerment in this ETF, and that'll kind of juxtapose the kind of the male dominance of the ETF. So it's another way to spread risk. And I know I think of different ways of doing it, and maybe to some people it might seem a little over excessive, but I just think too much about if I put all my eggs in one basket and that basket breaks, I lose all my money and that'd be devastating. So having it spread out like this and good investments that have potential but also good leadership, that's what I'm banking on the long term. And then all that glitters is just like gold. Since I invest in cryptocurrencies, a lot of my money is kind of like out of the stock market in that sense. So I don't necessarily want to buy gold, but I just keep it on there. And then I still want to do Pacific Powerhouse and Up and Coming to get into more basically foreign stocks. But that's kind of the update on my portfolio right now. I'm sitting at 23%, which is really good. I'm up almost $300 on it. And a lot of it's my most recent investments. You see Robots Rising up 11% since I bought it. And that was the beginning of this year, so it's already up double digits, which is really aggressive, which is good though. But obviously, like I said, everything here is overbought, so at some point all this stuff's gonna dip and drop back, and that's when I'm gonna buy in more. So I would not advise people to do what I do, of course, like do your own research, watch other videos, explore other content, learn at your own pace. But I'm not a buyer of really anything right now. Everything's just too overbought. It's just the RSI is too high. It's way up off of the moving average. This is just too much. But I am excited about the opportunity to invest in a new space that, again, product, but a new market. And marijuana stocks. And like I said, in California alone, that's the potential to make $1 billion annually, which is good for the business, but also again that's going to be taxed, which is a lot of good growth for the state. So I'm pretty excited about that. I'm hoping this will be an aggressive growth for this kind of business. But anyway, I hope this was all interesting. Like I said, Stash is doing a good job keeping up to date and adding new ETFs and spreading things out. I'm really impressed with this app. I really love using it. And that's why I talk about it a lot with you guys because I want to share. But anyways, that's all I got for today. So in the future, I'll keep you posted and we'll see what goes from there. So have a nice day.